Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Cues are looking fairly positive with Wall Street ending on a high. GIFT Nifty hinting at a 0.4% kind of an uptick on the indices. In fact, yesterday it was a day of breather after hitting that 24,200 mark. The index really failed to sustain those levels, and although we did manage to defend that 24,100 mark, but we ended the day largely flat in the negative zone. This morning, of course, the stock in focus will be HDFC Bank. FII holding has dropped according to the June data, and that has made it eligible for weight increase on the MSCI. We will be talking about what kind of an impact could that have on the shares of HDFC Bank. Either they will open gap up on the back of this news, or a sell on news kind of scenario could play out. We'll have to wait and watch as to what really happens at 9:15. Of course, if we see a good up move on the HDFC Bank shares, we could see a good leg up on the Nifty Bank index as well, which ended in the red yesterday. So lots to talk about in the next half an hour, but of course all your stock related queries will also be in focus. Keep your queries coming in on our live feed. We'll try and take them up, but before we move any further, let's take a look at the top headlines at this hour. Wall Street ends the volatile session on a firm note. The S&P 500 has shut shop above that 5,500 level for the first time. The Nasdaq as well has notched a record close, even as Fed Chairman Jerome Powell suggests that despite progress on inflation, the central bank is not ready to cut rates yet. Asian markets trade largely higher following a very strong handover from Wall Street. The GIFT Nifty is also suggesting a positive start for the Indian market after yesterday's breather. Crude prices rise but gave up some gains, with Brent trading around that $86 a barrel mark. Gold, meanwhile, remains subdued ahead of key US economic data. And the stock in focus today will be HDFC Bank. Foreign shareholding falls to under 55%, creating room for an increase in MSCI weightage. Now, experts see inflows of anywhere between $3 to $4 billion as a result of a possible increase in weightage. Well, just about 11 minutes to go for the markets to open. Let's just quickly take, recap the cues or the kind of close that we saw yesterday and what kind of cues we are getting this morning. Both the Sensex and Nifty ended flat, but they were in the negative zone. Banks were underperforming yesterday. Of course, we hit a fresh record high at open yesterday, but failed to sustain those levels. And throughout the day, we were trading in the negative zone. Private banks saw profit booking, leading to a 1% cut on the Nifty Bank index. So you had the likes of ICICI Bank and Kotak Bank, of course, on the back of news flow, particularly for Kotak Bank, ending near day's lows. But today, HDFC Bank could revive sentiment on the Nifty Bank index. Of course, a point to note is that it's a weekly expiry for Nifty Bank as well. So this particular index will be in focus. Sensex fell somewhere around 35 points to shut shop around that 79,450 mark, so just around that level, and the Nifty ended around 24,120 or thereabouts, down by about 18 points or so. Nifty Bank index saw a 400-point cut. The Nifty Mid-Cap index Mid-Cap index was underperforming, logged a loss of somewhere around 0.8% or thereabouts. IT stocks built on Monday's gains. Brokerages are expecting, muted set of numbers in the first quarter, but they don't expect guidance to be revised any further. So that's something that brokerages are betting on, and that's why they have turned positive on the IT space, which of course has been buzzing in the last 1 month or so. In terms of the put call ratio, it declined to 1.15 vis-a-vis 1.2 levels in the previous session. Stocks in F&O ban, no new additions, no deletions. 2 stocks remain in F&O ban today as well: India Cements as well as Indus Towers. Talk about the fund flows. Domestic institutional investors continue to buy, so they bought shares worth 650 crore rupees or thereabouts in cash markets. Foreign investors yesterday sold stocks worth 2,000 crore rupees in the cash markets. Last few in the last 1 or 2 weeks, we've seen some bit of FI buying emerge. In fact, in the month of June itself, we saw a buying by FIs in the cash market in excess of 25,000 crore rupees. But yesterday's sell figure, I think was the highest in in the last few sessions, 2,000 crore rupees worth of stocks sold in the cash markets. But let me bring on board our technical expert for today. Joining me is Rajesh Palviya from Axis Securities. Rajesh, great to have you on this show. The support levels or the base level for the Nifty keeps going up, 24,200. That has been conquered yesterday. So in terms of support level, what should you watch out for? But would you expect HDFC Bank to provide that leg up in today's session, because private banks were among the biggest laggards yesterday, right? Today, do you expect the texture to change because of the news flow around HDFC Bank?
Good morning, Nandita. Yeah, definitely. So base is now shifting higher, and now comfortably put writers are writing there or adding their position at 24,000 strike. So that is likely to act as a good support area for Nifty in the near term perspective. Even in the previous day also, we have seen some addition in 24,100 strike also. So I think if we open today above 24,100, then we may see further more upside in the Nifty. In the previous day, there was a consolidation in the Nifty in a very tight range. So again, if we crosses about 24,200, then this really can extend to 24,350 also for the Nifty. So overall texture for Nifty is on the bullish side. Broader market is also showing good traction in terms of buying. Mid cap, small cap stocks are also participating in this up move. So I think overall structure is bullish. Buy on dip should be a strategy for traders. 24,000 on Nifty spot should be your stop loss. For Bank Nifty, the immediate support area is placed at 52,000 level. That level needs to watch closely for next couple of trading session. If we hold these level, then yes, there could be high possibility. Again, we may see further more upside from current level, and on the high side, 52,600. That's the major supply zone at this moment. If we crosses those level, then maybe a short covering action may trigger in Bank Nifty, and then we can see further more higher level. But till the time 52,600 not crossed for Bank Nifty spot, our targets are around those levels, so we may review around those levels. But at this moment, 52,000, 51,900 should be the stop loss too long. As you talked about HDFC, yes, there is a strength in HDFC. This is the third consecutive week where we are seeing HDFC Bank is making higher high-low formation. That clearly shows there is sustained buying action is taking place. In this last rally of Bank Nifty, the major participation was from the HDFC Bank only. Looking at the weekly structure, stock is now approaching towards its December 2023 swing high. So almost, long consolidation breakout is going to take place if stocks manages to cross above 1740 level. So it's a multiple supply zone breakout is likely to be there in HDFC Bank if it crosses above 1740 level. So I think if it's hold 1740, there is a possibility that we may see short covering in HDFC Bank, and really can extend to 1790 to 1820 also in the HDFC Bank. So yes, it's a buy from our side also. Keep your stop losses at around 1720.
All right, those are the levels to watch out for. On an HDFC Bank, could also cross levels of 1850 or thereabouts. But what about Kotak Bank? Ended at day's low yesterday. Any strategy here on Kotak Bank?
So Kotak Bank is underperforming stocks from the private bank universe. Though there was some recovery in last couple of weeks, but still stock is still struggling to cross its multiple supply zone, which is placed at around 1840, 1850 zone, and we have seen some supply pressure from those levels. So until the stock not crosses over 1820, 1840 level, we may see some more consolidation or some pressure in the stock. On the downside, the important support for near-term structure is placed at around 1730. If it slips below to 1730, which is almost coincide with its 20-day as well as 50-day moving average, break below 1730, we may see further more supply pressure to take a stock further lower to 1700 level also. So at this moment, on the higher side, 1820 needs to cross, then only we may see some recovery trade to play out in Kotak Bank.
Okay, that was about Kotak Bank, but another stock that will be in focus would be Dmart, Avenue Supermarts, right? Because the Q1 business update has come in. Standalone revenue has grown 18% on a YY basis. Total number of store additions, as of 30th June. are at 371. The stock has been gaining traction in recent times. Recently hit 52-week highs as well. How are you reading the charts now? What are the patterns looking like? Should one chase this momentum, or do you think there could be a break, or and perhaps risk reward? How is it looking right now? Is it favorable, or do you think after recent uptick, people need to really watch out for some bit of correction before buying in?
So if I analyze on the short to medium term perspective, stock is showing strength. On the near term structure also, stock is holding about 20-day moving average, 50-day moving average. So here also there is a strength. The stock has retraced to almost its 20-day moving average. So that's the important and multiple support area for the stock on the downside. So 4650, 4670 are the key level on the downside for Dmart. On the higher side, there is still scope of moving upward, as overall structure is bullish, and stock is moving in sideways consolidation since last couple of days. So we believe that if stocks crosses above 4850 zone, then there is a high possibility that we may see another round of rally in the stock. Though stocks have moved up in last couple of months, but still there is a room for further more upside. If that breakout happens above 4850, then this rally can extend to 5000 level also for Dmart. So our view is bullish with stop loss of 4660.
Okay, the view is bullish on Dmart. Another stock that would be in focus would be Emcure Finance. It has come out with its first quarter update, not very encouraging. Disbursements have risen 3%. Collection efficiency, in fact, if you look at that, has come in at 95% vis-a-vis 96% on a YOY basis. Even on a month-on-month basis, it is lower. How would you really approach this stock now, Emcure Financial? I think in the last month or so, it has given a return of somewhere around 8% or thereabouts, but it's still sub 300 levels. Would you look at it within the NBFC basket?
So in last couple of days, NBFC basket have done well, but Emcure Finance is also recovered from its recent low. Looking at the near-term, short-term structure, the immediate supply zone, or we can say steep resistance, is placed at around 310 level. That needs to watch closely until the stock not crosses above 310. We might see some consolidation with some supply pressure. On the downside, the major support area is placed at around 292 to 285 kind of zone. That's the level on the downside for Emcure Financial on the at the near term as well as on the short term structure. So we believe till 310 is not taken out, some consolidation range of 285 to 310 would be there. On the breakout of 310, yes, there could be a rally for 340 target.
All right, that's the view on Emcure Finance. But as we head into the opening bell, just want to understand what are the stocks that you're keeping on your radar for the next couple of trading sessions.
So I think from pharma space, one can look at Sun Pharma. That stock has done well, and looking at the overall structure, we believe that if its stocks continues to hold above 1490 zone, then there is a high possibility that Sun Pharma may exhibit good amount of rally towards 1580 to 1600. So that stock needs to watch for short-term perspective. Samvardhana Motherson is looking promising. Stock is enjoying its all-time high trajectory. So we believe here we can see a further follow-up buying action. Possible target for Samvardhana Motherson could be around 212 to 215. Your stop loss should be placed at around 195. The third stock that we like at this juncture, that is Reliance Industry. That stock is also looking promising. Stock after the rally above 3100, stock is consolidating narrow range. So we believe that till stock is holding above 3070 level, there is a high possibility that we can see another round of rally in Reliance Industry, and possible upside target we could see towards 3200 to 3240 also in short term perspective.
All right, that's the view then. Those are the stocks, but let's take a look at how the markets have opened up. 24,200 back on the screen. A good 0.5% uptick coming in on the Nifty. Let's see what the Nifty Bank is doing. 0.7% uptick coming in on the Nifty Bank index, almost a 400-point up move. But I want to really see what HDFC Bank is doing really. 3% up. As was expected, because of course, in fact, Sensex, I want to pull that up. I think it has topped that 80,000 mark as well at open. Although right now it has cooled off, but I think the first tick was indicating 80,000. That's correct, 80,039. That is the record high on the Sensex, has topped that 80,000 mark as well for the first time ever. So yes, record-breaking spree continues. HDFC Bank providing that support that was needed for the index to power ahead, and that's exactly what has happened. In terms of other movers, just want to quickly pull up how the other banks are doing. Kotak Mahindra Bank, among the top Nifty gainers. Axis Bank from the private banking pack, IndusInd Bank. So yes, banks are having a good day. Almost a 500-point uptick there. 52,660 is where we are at. Aside of that, let's take a look at some of the other sectors and see how they are panning out. Metals, after US Chair Jerome Powell's commentary on inflation and rates, I want to see how the metal pack is doing. Of course, shining bright. 0.7% uptick on the Nifty metal pack as well. Hindalco among the gainers. Second top gainer on the Nifty. Aside of that, auto should also come up on your screen. See how that is doing, because the auto sales figures had come in recently. They were largely mixed, but the auto pack was, in fine fettle. Aside of that, if you look at some of the other sectors, IT. I want to pull up the IT pack. I think today it has taken some bit of a breather after 3 days of solid up moves. So trading flat with a negative bias. This is the only sector that in fact is trading in the red. FMCG as a pack is doing well, 0.5% uptick there. Autos are trading higher. Pharma is largely flat. PSU banking index has also managed to stage a comeback. Last two sessions we saw both the PSU bank index actually trading in the red or closing in the red. But aside of HDFC Bank, some of the other movers on the index are Tata Consumer, Kotak Bank, HDFC Life, some auto names, Hero Moto, M&M, Eicher Motors. These are the gainers on the index. On the flip side, Sun Pharma, that's the biggest laggard. Bharti Airtel, ICICI Bank for some reason is under pressure. Yesterday as well, it was near its day's low at close. Infosys, Tech Mahindra, TCS. So profit booking coming in on some of these IT names. Rajesh, looking at the market open, 80,000 on the Sensex is here. For the rest of the week, any thoughts on where Sensex is headed?
So I think we have furthermore room for this momentum to continue. 80,000, yes, there is a rally to continue, and we believe that the long-term structure for market is bullish, and I think here we can see rally to continue. Towards budget perspective, yes, we are bullish, and we believe that here we can see a target of 82,000 to 83,000 for in next couple of months for Sensex. But on a longer term perspective, we do expect that we can see a level of 90,000 also for Sensex, as broader market is showing good traction, and overall most of the large cap stocks are also started participating in this rally. So we believe that a buy and dip should be your strategy. Overall structure is bullish. The flow which we are seeing from the domestic funds as well as from the retailer side, that clearly showing the confidence on the Indian growth story as well as on the equity market, and the way earnings are panning out for most of the stocks are from the NSE 500 basket, that clearly showing that earning trajectory is also on the growth path. So that giving us confidence again, reforms which are already lined up by the current government. So I think 90,000 would be the target in the coming month for the Sensex. So buy on dip should be your strategy. Focus on the quality stocks where it is still potential to have further more rallies in coming months.
All right. When you say next month, as in within a month, or would you say next few months for 90,000 target on the Sensex?
90,000 within few months, not in the next month.
That's what I was wondering. You're sounding super bullish. But hold that thought. Let me also bring on board our next guest for today. Joining me is market expert Sunil Subramaniam. Hi, Mr. Subramaniam. Great to have you on the show on a day when the Sensex has also clocked a major milestone, 80,000. And Rajesh pointed out that 90,000 in the next few months, can't be ruled out. Would you concur with that? And do you think we will end the year somewhere around 90,000 or thereabouts?
Yeah, I think I do concur with that, because I think by and large, this Sensex rally so far, I would say, has been driven by domestic flows. FIIs have been blowing hot and cold based on anticipated election results, various news flows and all of that. But now with the government coming and settling down, all those concerns are away. There's expectation of very strong, robust reforms process underway now. And I think that the monsoon also has come in advance. That's good news for us. So I think that overall, if you see that FII flows coming back would definitely take the large cap indices. As you know, the mid and small cap indices are trading at a record premium to the large cap. So there's a lot of catch-up rally on the large cap. So a Sensex target of 90,000 in a few months by the year end, I think is quite a possibility.
All right, 90,000, quite a possibility on the Sensex. But let's talk about the stock of the day, HDFC Bank. It has seen a good 3% kind of an uptick. The foreign headroom has gone up, and it has the potential of weight increase on MSCI. In fact, it could even double, and expectations of $3 to $4 billion worth of inflows. But do you think this weight increase, or do you think the stock will see a major front running ahead of this event that comes up in August? So is there room for much more upside on HDFC Bank from here?
I would agree. I think that there's no problem with the quality of the bank. I think by and large the merger process with the parent has been handled well. I think one of the reasons there was selling pressure was the fact that people who were holding independently HDFC Limited and HDFC Bank had to consolidate, though some grandfathering provisions allowed. So with all of that dust settling in, I think the quality of that bank, I think it remains supreme in the Indian market. And I would say that ahead of an increase in inclusion in the MSCI index, operators would generally come in and buy. So I do expect that this rally to sustain for quite some time in that because quality, I think, end of the day will prevail.
Okay, shifting focus to the Sebi circular on transaction charges, right? Yesterday we had Nitin Kamath tweeting that, they may look at ending zero brokerage, format, right? So how are you viewing this move, in terms of retail investors? Do you think it will hit volumes going forward? And how does it really bode for these deep discount brokers?
See, obviously for them now with this Sebi ruling coming in, their differential pricing to make money off a few will take a hit. So their business model got to readjust. Whether if you look at what you mentioned, that Zviada ending zero, now even if he charges a little bit, he's already built a huge customer base. So I think that I think it's a very short-term, negative kind of a thought process. As the business model realigns itself, I think post-COVID itself, enough investors opening new Dmart accounts, doing F&O, I think have got into this habit of, dabbling in the stock market, if I may call it that. So I think that this kind of a level playing field, I think what Sebi wants to do is to create it more level. So I think the business models will take time to readjust, but in the long run, I don't see it impacting the absolute profits. I think just that the way the profit model works, that you give it very cheap to a large number and then they make money of a few versus making little money of a lot of people. I think that's just a reassessment. I don't think that in the long run it's going to impact these brokerages.
Mr. Subramaniam, I want to get in your thoughts on the IT pack once again, because in the last 1 month we've seen the IT pack gaining traction. Recently all the brokerages have been turning positive, but on ground there seems to be no improvement in the discretionary demand environment. Is it the fact that revenues may have bottomed out, guidances may not be cut further? Do you think are these the factors that are driving optimism in the IT pack? Because Q1 is again expected to be a little weak. So what are your thoughts? What exactly is driving this up move in IT names?
So two things. One is the fact that I think a lot of passive flows are getting allocated into India. So when passive flows come, IT gets its share of flows from being an index heavyweight. So to that extent that, that money is coming in, and so despite not so great growth prospects, you still get buying capacity coming in. That's number one. Number two is, I think in an era of uncertainty around the world, this is a heavy election bound season for the rest of the world too. And in an era of uncertainty, there is a flight to safety, and I think Indian IT represents a very strong safety pack, because while you will not see strong growth upwards, you're not going to see a cyclical downturn in the IT. So I think that reallocation of capital towards the safety, and as more FII flows come into, which I answered in your first question, right? I do expect the IT pack to continue to get buying support. So I think that it's just reverting to its pre-COVID days of being a stable, strong, resilient, safety-oriented pack, which is the right place for IT to be in, I would say.
But are you also, so you are also overweight IT?
Yes.
All right. I want to get in your thoughts on the power PSUs, right? In the morning, I was just reading a report by Bernstein, and they have initiated coverage on PFC and REC. These stocks have seen phenomenal run, but in the last 1 month or so, they have seen a fair bit of profit booking as well. But Bernstein has pointed out that investors are actually underestimating the duration and intensity of the power cycle, and these two stocks, these discoms, appear much more attractive in terms of valuations compared to the power peers. What are your thoughts? Because we've already discussed PSUs, in details in our last interaction. But has anything changed in terms of your views when it comes to the power PSUs in particular?
No, I think that the power is a long-term story. I agree with that report that it's a long-term story. It's just that in the last few months before this recent, correction or slowdown, there has been a lot of optimism and hope built into the prices. And that's just stabilizing. But I think this rally should again pick up speed, and for the very simple reason that a lot of domestic money, I think SBI Mutual Fund launched an energy opportunities fund which raised 5,000-6,000 crores. Currently, ICICI Mutual Fund is launching, I think yesterday or something, an energy opportunity funds. So these energy opportunity funds will naturally have to go and look at power as a very key element of their portfolio. So if you're going to get 5,000-10,000 crores of money coming in over the next 3 to 6 months, which typically NFOs take to deploy into the market, you will see buying support coming in, and I expect these prices to again start rising now. But medium term, the power story is a very strong story, especially because there's also renewable energy power being built into the pack. As you know, India is going from a 70-30 ratio to a 50-50 hopefully by 2030, and there's 500 gigawatt of power capacity being going to be created even in renewable, and some of these PSUs may be in the forefront of leading that charge too.
So one should buy on dip. Is that the strategy one should follow?
Always. That's never a question.
All right. Last time I think we spoke, we discussed how the gap between value and growth is narrowing. I think with Sensex at 80,000, that gap may have narrowed further, right? So if one has to really look for, comfort, safety, value, which are the pockets you would identify for that purpose?
I would actually place my bets on 3 parts. One, I would say IT. Because like I said, that's the safety element. I think there's resilience there. The second aspect would be banking. I think again there, the indices haven't really gone up, but I believe the future of banking is very robust. So banking and financial services, again, it's a pack where I would place some emphasis. And to me, consumer discretionary is the story which I believe has some legs to run. So I think that these 3 would be where the market's attention has not been there so much. So I'm little playing contrarian here and saying that these will also play catch up. So these are element of safety in the overall valuation pack.
All right, that's the view then. With that, Mr. Subramaniam, would like to thank you for taking out time and joining in and sharing your thoughts with us. Always a pleasure, and I look forward to our next chat as well.
Sure, thank you.
Well, with that, let's go back to Rajesh then. Rajesh, your thoughts on persistent systems? Anything you're spotting here? Because there is news flow that the US arm will be acquiring 100% stake in a company for $20 million or thereabouts. Any thoughts on where the stock is headed? How should one really play the stock?
So view is bullish for persistent. The way stock is moving, on a weekly as well as on the monthly chart, we believe that there is a high possibility that this rally can extend further. Stock in this last couple of weeks, stock has shown good buying interest and now managed to give breakout above its Feb 2024 swing high. So looking at the breakout on the weekly chart, we believe that if now stocks holds above 4,500 level, then there is a possibility of this extension of rally towards 4650, even 4700 also. So I think those who have already bought the stock at lower level can hold the position. Stop loss should be trailed at around 44.90 to to ride this rally.
Okay, that's a view on persistent systems, but let's shift focus and get in all our viewer queries answered then. Pooja has written in and wants to know whether K Fintech is one stock that she should be looking at buying at current levels. The stock has seen good traction last 5 days, but it's still some time away from its 52-week highs. Would you advise a buy now?
So we have seen a brief correction in the stock, and looking at the this overall structure for the stock has taken the support from its 20-day moving average, 50-day moving average, and now again buying interest is there in K Fintech. Looking at near-term structure, yes, one can hold the position if you have already bought, or if you want to buy fresh, yes, you can add fresh also. Your stop loss for short-term trading perspective to be at around 735. And on the higher side, I think this rally may get extension towards 800 to 815.
Okay, those are the levels to watch out for, 800 to 815. The rally could extend till there. Hope that answers your query. The next query is coming in from Srivardhan Gupta. Wants to know your thoughts on Canbaar Retail. This stock has been on an upward trajectory. The last 1 month, we've seen a 28% uptick. Very close to 52-week highs. Do you think 300 kind of levels possible here?
So stock is forming rounding bottom sort of formation on daily chart. Looking at the weekly chart also, yes, stock is now approaching towards its major supply zone area, which is placed at around 270-75 zone. So there is a high possibility that stock may attempt to give breakout about 275, and that if that breakout happens, then yes, there is a high possibility that stock may attempt to move further higher towards 300 to 310 level also. So those who have already in trade on the long side can hold the position. At this juncture, we would suggest a stop loss of 254 to hold long position.
Okay, that's the view on this stock. But another query has come in on HUL. Of course, we know that since the election verdict, FMCG has been the much talked about sector. But HUL still some $300 away from its 52-week high. At the current juncture, what should the strategy be?
So it's a slow moving stock, low beta stock, though still FMCG is in consolidation on a broader term, and looking at most of the stocks, they are still consolidating. Yes, some recovery is taken place from the recent low. So for HUL, the immediate major supply zone is placed at around 25.30, 25.40 area. If stocks crosses those levels, then there could be another extension of rally to 2600 to 2650. So those who have already bought a stock, I think it will take time because it's a slow mover stock. Still consolidation is taking place. So if you have patience to hold it for another couple of months, then you can buy and accumulate the stock. Yes, we could see a rally in coming months, but it may take time. So keep accumulating the stock. Your stop loss for positional perspective should be placed at around 24.20.
Okay, that's a view on HUL. The last couple of queries really. Alex has written in, wants to know your thoughts on ONGC and Petronet within the green hydrogen theme. For the long term, how are these two poised on the charts?
So first we'll discuss on ONGC. Since last 3-4 months, stock is consolidating in very tight range. On the lower side, the base is placed at around 260 level. On the higher side, the supply zone is placed at around 290 level. So I think looking at the consolidation, looking at the near-term structure on the daily chart, now stock is penetrating to its falling trend line. So I think if stock manages to close about 282, 284 level, then there could be a chance that we may see a breakout above consolidation range, and then ONGC may exhibit really towards 310 to 315. So if you want to buy for some positional perspective, yes, you can buy it and hold it with stop loss of 260. Petronet is also looking bullish on the long-term chart. Stock is almost trading near to its all-time high trajectory. The way stock is holding the ground at higher level, we believe that Petronet may also continue its upward trajectory as broader market is in bullish zone. So yes, there is a high possibility that we may see a target towards 360 to 370 for Petronet going forward. So buy on dip should be a strategy. Your stop loss should be placed at around 310. It's a positional perspective.
Okay, the next query is coming in on Crompton from Pon Rajesh. Wants to know your thoughts on this stock. The stock has been moving in a tight range over the last 1 month or so, but has managed to defend that 400 mark. How is the risk reward looking like here?
So I think overall structure is bullish since last 2-3 weeks. Some profit taking is happening, but still stock is holding the important support area, which is placed at around 390. So I think our view is likely to remain on the bullish side till the stock is holding above 390. If it breaks below 390, then there could be some more significant supply pressure or profit taking can emerge in this stock. But I think till stock is holding above those level, there is a high possibility that stock may again start its upward move. On the higher side, 430 is the immediate challenging level for the stock. If it crosses 430, we can see a rally towards 470 to 480 also.
Okay, that's the view on Crompton. Hope that answers your query. The last one then just come in, so might as well take it. Vaibhav Srivastav wants to know your thoughts on Himadri Specialty Chemicals for the next 2 years. The stock has seen, good moves in the last 1 month, almost an 18% kind of uptick, close to 52-week highs as well. Should one buy with a 2-year time horizon?
So most of the chemical stocks have shown some buying interest in last couple of days. Himadri Specialty is also one of those stocks. Looking at the near-term, short-term, long-term structure, stock is showing good traction in terms of buying. Overall structure is bullish across all time frame. On the monthly chart, now stock is approaching or managed to give breakout above its previous swing high of January 2024. So I think till stock is holding above 390-95 zone, there is a high possibility that we may see another round of rally towards 440 to 450. So keep your stop loss at around 390 if you bought at lower level.
All right, that's the view on Himadri Specialty Chemicals. But with that, we have come to the end of the query segment. So if we couldn't take up any of your queries, don't worry, send them in tomorrow. We'll try and take them up. But Rajesh, thanks a lot for taking out time and joining in and sharing your thoughts with us and sharing your views on so many stocks and helping our viewers navigate this market as well. Look forward to speaking to you next week as well.
Sure, thank you.
Well, with that, of course, there is a new IPO that has opened up today, Emcure Pharma, a shark of an IPO, so to say. It has raised somewhere around 583 crore rupees from anchor investors ahead of the IPO open. Investors include marquee names like Abu Dhabi Investment Authority, Goldman Sachs, Morgan Stanley. Within the domestic mutual fund space, you have names like SBI Mutual Fund, HDFC Mutual Fund, ICICI Pru Mutual Fund, White Oak. A lot of marquee names have shown interest. The company, of course, is looking to raise somewhere around 1952 crore rupees via an IPO. The IPO price band has been fixed at 960 rupees to 1008 rupees per share. Of course, one market lot equals to 14 shares. Whether you should be subscribing to this issue or not, log on to moneycontrol.com and see what analysts have to say, what kind of ratings they have given. And I'll be getting you the management at 11:30 a.m. So don't forget to tune in for that. But for now, we are leaving the market in good stead. 24,257 is where we are at, 130 point uptick. And of course, the Sensex at 79,900, but we did hit that crucial 80,000 mark for the first time today. With that, it's a wrap from me and the entire team. Thanks a lot for tuning in. You guys stay tuned to Money Control for all your other news and updates.